This video is going to be a little bit longer because in this question we are walking through how to create 3 different schedules based on one data set. The direct materials used schedule, the cost of goods manufactured schedule, and then finally the cost of goods sold schedule. So before we start, take a minute and download the file for the question that I'm going to be going through with you. So there's multiple pages, you're going to need them all, and this will allow you to fill out the answers by hand, which will help you learn it better, and also it'll help illustrate how all of these schedules relate to each other. So here's our data set, Hatch Manufacturing. Go ahead and download and print it all out, and then let's go. We are going to use one set of data to create 3 different manufacturing schedules. Let's get started with our first schedule, which is the calculation of direct materials used. I can see right away here that in order to calculate direct materials used, I need these 4 items of information here. This one I'm going to calculate, which means I need to find these 3 items over on my data set. So let's go over to the data set and find these 3 items that I just starred. So we need first beginning raw materials, direct materials purchased, and ending raw materials. Now let's go plug those 3 figures into our schedule. Beginning raw materials is $13,000. Direct materials purchased is $33,000. Simply add those 2 together to get the total materials available for use of $46,000. Now we will subtract the ending raw materials of $10,500 to get our direct materials used in production of $35,500. I'm going to put a star by this number because we're going to use it on our next schedule. Now let's move to our second schedule, which is the calculation of cost of goods manufactured. So as you can see, to calculate cost of goods manufactured, you need all of these items here. Total manufacturing cost to account for, we're going to calculate. All of the other ones we need to find on the schedule, or in the case of direct materials used in production, from the schedule that we just completed. So for direct materials used, I'm going to carry down the same number that I calculated on my calculation of direct materials used scheduled. All the other items here I need to go back and get from my data set. So I'm going to star the items that I need to get from my data set. So now we'll go back to the data set and find these other items of information that we need. So back to the data set, and let's find the items that we need for our cost of goods manufactured schedule. So we're going to need beginning work in process inventory. We're going to need direct labor. We're going to need ending work in process inventory. And the last thing we need is manufacturing overhead. But I don't see any of the line items here in our group that say total manufacturing overhead. So what am I going to do? Total manufacturing overhead isn't given, but I can calculate it by identifying of my data set which of these items belong as parts of manufacturing overhead. So I'm going to start at the top and just look for items that belong in manufacturing overhead. Utilities for plant, yes, because they relate to manufacturing. Not delivery, not sales salaries, yes. To the plant and janitor. Nothing with sales revenue, nothing with customer hotline. Rent on the manufacturing plant, yes. And that's all I see that belong in manufacturing overhead. So to calculate the total manufacturing overhead, we need to take those 3 items that I just identified and add them up. So I add those 3 components up and I get total manufacturing overhead of $17,200. Now that I've calculated total overhead costs, I can now populate the rest of my cost of goods manufactured schedule. So we'll go back down here and we'll put in the inputs from the data set and the amount that we calculated for total overhead. So our total overhead was $17,200. Our direct labor is $28,000. beginning work in process inventory $1,400 and ending work in process inventory of $6,000. Now I can complete my schedule, so I'm going to add together all of these first items in order to calculate total manufacturing costs to account for, which will be $82,100. Then I will subtract the ending work in process inventory to come up with cost of goods manufactured in the amount of $76,100. Now I'm going to need this figure on a future schedule, so I'm also going to put a star next to it. But I'll change the color of the star so it doesn't get mixed up with the first one. So we're done with our cost of goods manufactured schedule. Now we can move to our cost of goods sold schedule. So on this schedule, we're going to take the cost of goods manufactured figure right from the schedule we just completed. And we'll bring our star back up here too, so that we can remember where this number came from. Let's take a look at the other numbers we need. Beginning finished goods inventory and ending finished goods inventory we need to go back and find on our data set. Goods available for sale is a subtotal that we are going to calculate. So let's go back to the data set. We're looking for beginning finished goods inventory and ending finished goods inventory. So here we are back to our data set. And here are the finished goods numbers that we need. So that was 1,000 for the beginning of the year finished goods and 5,000 for the ending finished goods. Now we'll go back and put those into our cost of goods sold schedule. Navigate back here. Here we go. Now we need to calculate total cost of goods available for sale by adding these first two figures together. So that gives you cost of goods available for sale of $77,100. Then we're going to subtract the ending finished goods inventory to give us cost of goods sold of $72,100. Now, we're going to then use this cost of goods sold figure on the last schedule that we are filling out, which is our income statement. So we'll also put a star next to cost of goods sold because that is the last number that we are going to end up transferring to another schedule. So now let's move down to our income statement. So we just calculated up above our cost of goods sold, so we'll pull that number with the red star down into our income statement. So on our income statement, we're going to calculate operating income, we're going to calculate gross profit. So all the other items here, we need to go back and once again find them from our data set. So sales revenue, and then our three operating expenses here, customer service hotline, delivery, and sales salary. So we'll return one final time back to our data set to find those figures that we need. It's pretty much just everything that's left. Sales revenue is $100,000. And then we have our three operating expenses: the delivery expense, the sales salaries expense, and the customer service hotline expense. So now that we have those three additional figures, we can go back to our income statement and populate those numbers in. Once we've populated those three numbers, all we have to do now is calculate gross profit and then operating income. So gross profit here would be $27,900, and then subtract the three operating expenses to calculate our operating income of $20,400. Now we have completed all of our manufacturing schedules and then our income statement. So what I want you to remember here, if you look at the stars, okay, as we go back, I want you to remember how direct materials used flows from the first schedule to the second schedule, and how the cost of goods manufactured flows from the second schedule to the third schedule, and then how cost of goods sold flows from the cost of goods sold schedule to the income statement. The last thing to discuss is what would total inventory be at the balance sheet. So we have a space over here to fill out our balance sheet. Now the balance sheet would show the ending balances in our 3 different manufacturing inventory accounts. So all 3 of these figures would come right from our data set. So we'll go back there and we're going to look for end of the period work in process, raw materials, and finished goods. Once we've looked at those figures, once again, we'll just go back and fill them out on our balance sheet here. Once we've done that, we calculate total inventory to be 21,500, and this is what would be reported on our balance sheet at the end of the period for inventory. This concludes our exercise where we calculated 3 different manufacturing schedules and then also an income statement and a partial balance sheet.